Okay. So this is how we will deal with exits. Okay. So we'll use 10 EMA for it, and moving averages are the best print and very simple way to exit. It is a two-way process. One is we exiting into strength. Let's open some example. Let's say this one. So exiting, booking profits. It is done in two parts. First one is booking part into strength plus balance on weakness. Weakness is when the stock breaks 10 EMA. Breaking up 10 EMA is the final exit. That simply means that the short-term trend which we were betting around, the short-term trend which we were betting is now over. Okay, that's the final exit. Let's say in this example, this is somewhere entry is 10 EMA is the final exit. Is it the top? Is this the top up in this case? No, right? Top at top it was 35% gains. Final 10 EMA is 21%. This top part you will always miss. Again, the desire to sell at top. The desire is to sell here only. In reality, in logical ways, you never know it. Whether it moves back from 30% or after 60% or after 80%. A swing, a single side swing after the buy, it can go to 80-90%. So there are some examples in which it went to 90% kind of, which I can remember instantly. This is one. Okay. Single side, this one went huge. It's like here, I think it closed below 10. Again, it picked 118.20. This is like exceptional to exceptional, rarest of the rare. This is 1 in 500. Okay, when it moves single side without breaking this at 150%, on max you can think for is like 80% kind of. That can happen. Okay, that is upper limit. On an average, I'll tell the bottom limit and the upper limit and then the average part. Okay, look up here. In this case, this went like 50% without breaking 10 EMA. Here it broke, okay, for once. So 24% here and here 24%. In this case, two part this. Here, look, this one. I guess here single side somewhere, let's see, from here it went 105%. In this case, the entry was somewhere here in this candle. We'll not discuss entry. Okay, entry we have discussed a lot. Let's say you entered up here and this is the stock move. At no point in time it broke the 10 EMA. This green line is 10 EMA. At no point it broke 10 EMA. Of course, it took time. This almost took 28, 29 bar. That's like around 1.5 month. Okay, this was 1.5 month holding overall. But is this good? Like 10 EMA broke here now, 61%. Is this good? Considering you had a 4%, 5% stop loss in this. Is this kind of risk reward we are looking? Of course, yes, right. Challenges of in this trade, holding 10-10 would be impatience. Okay, that you are simply afraid when stock doesn't move for, let's say, in this area of 10 days, 15 days. It never broke the 10, it simply went up. Now, how to exit will be, first part will be into strength. And this is where your risk reward and your psychology will come. Now, into strength, this can be 10% gains to 20% gains. Now, this is the upper limit of any single side swing without breaking the 10, that is 80%. After this, majority of the cases, it starts making a next base kind of this correction going below 10, 20, 15, here come to 50. In that case, it takes some shakeouts. Let's see some more examples of such big moves. Let's say here you see Borosil Renewables, some past one. So here, let's say it moves this 40%, 50%. Here see, look, this one. This is like not breaking up 10, walked very, very high, 180%. Again, one of the rarest. 80% is kind of what you should expect. Let's see, IRFC, GRSC, these all sectoral moves when it happened. These were very huge. See here, not broke 10 EMA. Going below is fine. Closing, it went 116, 100%, 108%. Here, single side 10, 130, 120%. So this is how stock can go when you hold. When you are holding the right one, momentum coming in, everything right, you will have such winners. Okay. At some moment, you will have stocks which is like 50%, 50% gain, 60%, 100%. What I'm trying to tell you is what can be the upper limit. Okay, so that your mind is open. Currently, what happens is that sometimes people sells up fully at 5% only, 10% only. They work at 1:2 risk reward. That's not something which you should make a habit of. Upper side can be so immense. Let's say in this case, on average, you made 50% only. Let's say you booked half and then half you are trailing somewhere exited up here when 10 EMA is closing. You made 50%. You took a risk here of 4%, 5%. Okay, sometimes it can be even less. Sometimes it can be even less of 3-4%. When making 1:10 risk reward, these are kind of trades that you need to make big money. Big money will never be made by closing everything at 1:2 or 1:3 or 1:4. Big money will be made in trailing only. Of course, market scenario will also determine a part of it. But when bull market will come, let me just talk about bull market. You will not make money by cutting them very, very quick. You will make big money only by trailing. 1:10, 1:8, 1:9 risk reward trades, this will pump up your overall portfolio. A 1:2 trade will never pump your portfolio. But a 1:8 trade, 1:10, 1:12 will pump. For that, you will have to hold for 1 month, 1.5 months, 2 months, 2.5 months also. Let me tell you, give you some more such upper limit moves, okay, so that your horizon is first increased. If it's not, cut this 65% move here. Let's see some more. Apollo Micro, this is a very recent one. 80% move without breaking 10. Paradeep Phosphates. Rohan asked a very good question. This strategy main works in bull market. Tell me any buying strategy which will work very good in bear market. No strategy will work very good in bear market. Prices go up only that you make money, right? In bear market, you'll have rallies. Of course, we learned that also previously, right? We learned that also previously. That is the core area to focus in a bear market. Look up these rallies. Let's this here. Every bear market, you will have rallies. It can be 1, it can be 2, it can be 3. That's only where you will make good money. Bear market is a more of a kind of patience. You need to first make your mindset in that direction. This strategy works very good in bear market also. But when in bear market, when prices are actually going up, that happens in the green region only. If prices are not moving up here, when this is like falling up like this, how will any buy strategy work here? Just think logically. How will any buying strategy will work in this space? For you to, for anything, for if you are buying anything and you want to make profit, it has to go up, right? But the characteristic of such red region is that it will not go up. So it's not a thing for strategy. The strategy works very good in bear, but you need to know when in bear market. When any buy of any strategy can work is when overall trend is moving up. Here you will apply. Here we always learn not to apply. You will have to sit out. Okay, you have to sit out. Prices are not moving. What you can do? The strategy, first thing, understand this is one major flaw which lot of people have. Okay, one very basic flaw is the strategy, or not only this, any. Does these moves prices? Does this strategy tells you, or does this strategy is indicating you that the prices will move? Or is this strategy moving the prices? What we are learning, first of all thing, if we apply the strategy, that will make the price go up. Does that will make the price move up? No. Okay, that doesn't move prices. Prices, we don't have any control. They want to move, they'll move. If they're not, then it didn't happen. Price move कर रहा है तो कर रहा है, नहीं कर रहा तो नहीं कर रहा. No control. No control. Okay. So anything that you are buying, but prices are not moving up, it's not a strategy issue. This question is asked very often. Does this strategy works in bear market? You want to buy, but the price wants to fall. Who is at fault? Who is at fault then? Price wants to go down. But you are buying. Who is at fault? Is it strategy, or you, or me, or any XYZ person? Of course, it's you. You are your biggest competitor. I am my biggest competitor, okay? You are your own biggest competitor. You want to buy, you want to prove that, oh, in spite of everything going down, my stock should move up. It's a ego matter. In the first lecture that we did 1 month back, I told you one thing. I shared with you one basic thing. You can do only one thing. Either you satisfy ego, that is first thing, or you make money. You cannot do both. Trust me, you can never do both things together. You can do only one. There are people who satisfy their ego. It's okay if it's your objective to look the smartest person in a gathering. If that's your objective, you're satisfying your ego. Either you do that or you make money. You cannot do both. Because if you want to make money, you'll have to keep ego aside. Okay, when you keep ego aside, you see what's going on overall. Overall prices wants to go down. Here prices wants to go down. But you want your stock to move up, it's your fault. That's what we learn in market direction. Here, the price in green region, it wants to go up and you are betting, you are buying. So that's right. That's the right way. In every bear market, you will have 1, 2, 3 rallies. In this one also, we had this rally. Here you had this second very, very small rally, some winner. Third rally, this is not a rally at all. This is total clutter. Okay. Yes says it is tough. No, it is not tough. Let me tell you. It is not at all tough. It's your mind which is making it tough. Okay, because ये जब पीरियड में सिट आउट करना होता है, it's very difficult to sit out for most people. They continuously trade, they make losses, they get frustrated. They get frustrated in this region. Okay, and when they get frustrated in this region, they lose hope up here. Okay, either they will shift the strategy up here, they will think that some XYZ. But if you're sitting with patience, you know that, okay, this is not something I should be in. Okay, then it's all fine. It will not hamper your thinking, your abilities. First step is always to understand in selling. Okay, I don't want to go off topic too much. In selling, in building your psychology, first step, what's the first step? Okay, let's see who gets that right. What's the first step? In selling, in buying, everything you want to be in markets, what's the first thing you should know? What's the first basic thing that you should be aware of? It will determine how you adopt yourself. Okay. Vikas say rules even ahead of rules. Never fight against market. No, that's second thing. Okay, that's something you do. I'm talking about awareness. Salt and pepper says market direction. Roar says market direction. Great. That's the right answer. Habits and all these are all after that. Like, okay, that is also part of it. But say, for example, today I want to put money. I decided that, okay, I'm a swing trader and I'll now trade. What's the first thing I'll do? I'll not go with setup and this when I want to execute. I'll first think where we are in the market. Where you are in the market. That will determine how my psychology will flow. Okay, how my mindset will work. If you're not knowing this first thing itself, you are in problem. Okay, then you are in very deep problem. It will affect day-to-day basis. First thing itself is understanding phase of market. Because as per that, your overall mindset gets it. Now this phase in January also somewhere I posted and you have complete video on it that why it is a bear market. We also will again go through market direction some other week. What to expect from different cycles. How long is bull market? How long is bear market on an average? What should be your bear market expectations? So I have to start today. I'll first see where I am in market. And based on that, I'll decide what needs to be done, how aggressive I have to be, how I have to mix up here into this profit booking also, how I will be in this partial profit booking. Okay, that will also be impacted by your market direction. Okay, if you are in a bear market, then how long it's been in the bear market? How long it has been in the bear market? Is it like just starting? Can it be just the initial months? Or is it something which is already 10-15 months? Is it something with 8 months? You should be aware of it. let's look up here. You are currently sitting, and this I've posted like every month. I'm posting this stuff on Twitter if you are following. That which month we are in the overall bear market. Somewhere in 13th month you are currently. In average direction, if you are following on Twitter, you would be knowing. Let me open quickly that tweet also. Market, no, bear market, okay. Okay, this one. This is August. I posted that we are in 5th month of bear market. Here, this is of which month? This is April. Okay. This is of January. This is one of the posts, like many other posts I did in January, December, that we are entering into a bear market. Now, what do I expect? This also I have written somewhere that what is the expectation for the full year? Okay, read up this. This is recent one. This I posted on 26th of October. Now read this. First line I've written, when first I posted this on 13th January, my expectation for next 12 to 15 months was a single digit percentage returns only. In January 2025 only I've posted that you're entering in, and my expectation was set on that day itself कि अगले 1-1.5 साल अब सिंगल डिजिट का ही आएगा. कुछ अच्छी किस्मत रही, कुछ रैलीज आ गई बीच में, 1-2 रैलीज बियर मार्केट, तो हम डबल डिजिट पे कहीं ना कहीं आ जाएंगे. Okay. So, you knowing where you are in the overall market, that will help you in your mindset. So, I was knowing up here that it will be tough. Okay, next, there will be 1-2 rallies. Each rally can be 1.5 months. How do I know? History. Historically, that is what has happened. Historically, that is what has happened. Historically, this is what has happened. You have these kind of periods in which you have rallies. It's not that complete 1 year, 1.5 year you will not be able to trade. You will be able to trade. There will be rallies like this is a rally. From here, this 2-3 months is a rally. This 2 months rally. These 3 rallies came up here. If you look, this previous one, you have these rally here. 4-5 months. You have these 2 months rally up here. 2 rallies were there. Let's see, weekly it will be more better for you to see. You have this rally up here, this rally up here, 2 rallies up here, okay. Then you have new bull market. Here, this is currently which is going on. You had 1 rally here, this one, in which you will make some money. Here, this was second, very small, and I already knew that it can be small. Okay, it can be small as much as like 10 sessions, 8 sessions, and if it's a good, it can go like 2 months also, 2.5 months also. This third is just too chopped, not a rally in itself. Almost took 1.5 months reasonable, but I was prepared. I knew that it can happen. You might get frustrated. You might get frustrated. And these all things affect your profit booking. That's what I'm trying to tell you, that knowing where you are will affect your profit booking. Okay. Because if you are in a bear market, then you know that things will be very short. It's not like this that will happen, that it just keeps on going up. Look up this to here, where red phase of what, 5 candles. That's it. Majority green. Here I expected this only to happen. I expected the chop only. So if you expect that it will be like this, you will get 2-3 chances only in that year. I knew in itself in January. Not only this, let me tell you, here also I did it right. If we can see the old post, let me search it for you. That also the timing was right. My expectation was right of that point of time. Let's see if I can get to that really quick. It's of which year? Previous one, I think 2020, 2021, December, January. Does it give zeros? Oh, somewhere. Okay, this one, look. November 2021. Okay, this was first warning which I gave. November 2021. Look up this index. November 2021 here. Exact up here. This is what I posted at that point of time. People will soon understand the importance of exit when their 4x will become 2x. Okay, in 2017 also the same thing happened. This was one warning. I think before that post, October 22. It's not showing those posts before this. Here I told you, here right now I told you all years. Again, same thing. This is here written here. I just said that, and again same thing. Okay, previous post I think cannot go more than year 2000 October. Year 2022. Somewhere this post itself is not coming. Notional profits. Okay, this was 2021. Somewhere not coming. I have to search them previously, but yeah, this is where I developed an expectation that next 1 year I may not make money. My expectation for bear market is this only, single digit percentage. If I get more than that, I'm happy. Okay. How will I get more if the rallies are bigger? If the rallies are bigger, sharper, then here you see these rallies coming up here. This is one rally, this is second rally, this is third rally coming up here. And these were good. This is somewhere you will make good money. You may make good money up here. Index move 18%. If you are patient up here, you will make good money here. Okay, double digit can be done like 20-25%. In bear market also it can be done. Okay, 30%, 35% can also be done. It will depend on the rallies, how many rallies you are getting. 1 rally, 2 rally, 3 rally. It can be any of these. You don't know that in advance. You had these 3 good rallies up here. Okay. So coming back, knowing up which phase you are will help you in selling. That's what I wanted to tell you from all of this, that strategy works in all market. Okay, in bull, bear. In bear, you'll have to wait for that rally to come. Okay, because that's where prices are moving ahead. You are buying, your bet is that price should move up. And that will happen only when the trend is positive, when you are in a green region. Okay, how it will help in deciding up? is in partial booking. So what is selling into strength? Selling into strength simply means selling at a percentage of risk reward. Okay, that can be minimum 10%. Booking into, now this is more of a risk reward basis. In part position only. Part position, it can be 30%, it can be 20% also, and it can be 50% also. In this range, totally dependent on your emotional handling capacity. Plus, what we understood, phase of market. If I am in a bear market and I know that the rally is already there, done, stocks are not progressing that fast, it's a bit slow, I may book 50% on a risk reward basis. On 1:2, that will be 10% or 15%. If I am seeing that, okay, after a good red region, we are in a green region, so there can be some bear market rally, then I may sell less into strength and trail more via 10 EMA. If I am in a bull market, then I'll wait for 20%. Okay, then I'll wait for 20% to come, 25% to come, and then book. This all will depend on your emotional, psychological basis plus where you are in market. Okay, plus where you are in market. Based on that, you have to decide up how much to sell into strength, and this selling into strength is very crucial. Okay, this is very crucial because it frees up your capital, it balances your emotions. When next stock is coming up, you have some free capital up there. So booking into strength means simply booking on a risk reward that is 1:2 or 1:3. At a 1:2, it will come to 10% gains. So you can simply book at 10% as the stock is touching 10%. Let's say here you're booking. So you book here 20% or maybe 30 or maybe 50 or so. Depending on your psychology, we understood about emotional handling capacity. We will have to build it. Okay, build it slowly and slowly. Plus, knowing where you are in the market based on these two things. Second is you may decide to sell at 1:3. That will be for you 15% gains. Considering our maximum stop loss is 5%. In what we are doing is maximum at 5% stop loss. So at 1:3, it will be 15%. 1:4, 20% gains. 1:5, 25% gains. Based on market, you will have to decide how much you want to sell at what risk reward. Okay. There is nothing I can tell you fixed in this, and I have tried to explain you for last 40 minutes the reason for it, because it will be dependent on market and it will be dependent on your emotional capacity. Some stocks, okay, one thing we discuss is the upper limit that can happen. It can be like 80, 100% examples also I have shown you. Downside example is that it may be 6% only. Stock moves up 6%, goes fully back. Like it happened recently in some stock. Subros with me. In fact, it happens a lot of time. Here, this one went at 10%, 15%, and then it almost lost all the money up here. Went up 15%, and then in 2-3 days, some market sell off came. I exited at 1-2% only. This thing can happen. Now, part could have been sold at 10%, some could have been sold at 15%. It depends on how this red candle will affect you, how this will affect your emotions. Okay, how it will affect your emotions. You can handle it good, then you trail more. Okay, then book at 20% part. That's what my objective in this particular trade was. I'll book part at 20%. It didn't went till 20. After 15 only it reversed. But my emotions are balanced. I know that can happen. I can handle that thing. If it can work, then I know that if it works, then it can go till like this also. Then it can move like this also. So it has both pros and cons. You don't know in advance which stock will return from where. It will be dependent on market plus its own. Okay, so it can happen that you bought a stock when 8% of market sell off come and then 8% is fully gone. Okay. Then it may affect you. So you will have to figure this out, partial profit booking, but you should always book some in profit. There are benefits. You make quick gains up here. Okay, when you are selling at 15%, 20% based on risk reward, and since we never know how far can a stock can go, so upper side I have explained you that it can be 80, 100% also. Downward side it can be 5%, 6% also, and it then goes back. Can be 12% also, and it goes back. On an average, you can expect it to be like 25% kind of average. Whether it will reach 25 or not is a question that I also don't know. That I'm buying this stock, whether it will reach that 25 or not. That's why for making that average, you sell some in strength. Let's say you decided you will sell at 15%, so 50% you have sold at 15%. Balance you are trailing, and you somewhere exit at maybe 60%, maybe 65%. Your average will come at 25. Okay, if it doesn't reaches 25, at least you have sold that half at 15%, and then half you exited at cost to cost. So it is a way to manage up your emotions while keeping your risk and reward high. Even if you are getting a 25% average, that is 1:5 risk reward, which is excellent. Anything above 1:3 is excellent. 1:3 is good. Less than that is okay. 1:1 is bad. Okay, so it helps in balancing. Okay, even if stock reverses, you have at least sold something. Even if stock progresses, you at least have someone. But you should try to move slowly to upward side, and it will require a lot of mental muscle. It's a journey. I will tell you, if I tell you for the first day that book half at 25%, you will not be able to do it. Okay, because it may happen that current market may not be good. You are waiting for 25, it doesn't reach 25 itself. Or maybe I tell you to book at 10%, but in future the market scenario may change. You are in bull market, and then waiting for 25 made more sense because stocks are simply bursting. So something which is really you will have to figure out based on own psychology. That's what the end objective is. Of course, one thing which is as a rule that is done is 10 EMA. That's your limit. That is your limit. 10 EMA is the final exit. A decisive close below 10 EMA is a final exit. So let's say this stock you bought somewhere here. This is your final exit. Here till 45, how you handle it? You will sell some into profit, maybe at 10, 15, 20, 25 based on your personal emotional capacity. Balance is up at 10. इसके बाद आपको नहीं रखना है स्टॉक 10 के बाद. You can again re-enter. Let's say for example the stock break out here, and if everything, all our things are again fine, you have a follow through, you can trade second time, no problem. But for once you will have to close. Now what does decisive close means? It's a clean close. And after 10 it's no sense to hold for a swing trading. Okay, it's no sense to hold after 10. Stock can simply correct, take time, may take months or not. Let's say this example, this was Inox Wind, very good move. This one also I think was double up here, 127% move. Now this was in a bull market. The stock came, this is which month? November 2023. Let's see November 2023. September, October, November, somewhere here, green region. How to identify bull and bear? It's a separate question. I've already explained it and we'll do one more session on it. It's not that tough to identify, trust me. It's not that much tough to identify whether you are in bull or bear. It's simple. If you're not affected by outside news, it's simple. Okay, like how I identify. This is an example which I'm showing you live. This is an example, just recent market itself, which I have shown you. That in January, this one 2000. In last 3 times I was right in bear market. I'm not able to find up, but this January 2025, where is it? This one. This is of January 2025. 13th of Jan 2025, the date is here. This is real time, which I told you. You will go back and maybe next time I try to find up those tweets again. Previous 3 times it was right, and my expectation was set for next year. Okay, so this is a bull market area. So you understood that, okay, this is a bull market and some fall has already done, again back to green region. Then I'll hold it more. Based on market direction, I decided and my own psychology that I'm able to see some red days in between. I'm able to hold 2 months, 2.5 months. It's not easy to hold something for 2 months. It's tough for many, because what if the stock doesn't move for 5 days? Let's say here it did not move much in 5 days, but you had some other stock which moved 10%, 5%, constant, on a constant basis, XYZ things will come up. So it's not easy to hold. The holding for 2 months will also be dependent on your emotions only, your patience level. Here it went like 115%. So how I will handle in bull market? I'll wait for more, maybe 25, 30%, 35%. I'll exit it, some part position, and balance I'll look for a close below 10, a decisive close like this one here or maybe here. Now here also it closed below 10. So this is what I want you to think for. It should be a decisive close. Decisive means, in very layman terms I'll tell, easy to understand. Here it went below, it closed below 10 also. But at the end, it got very good support also. Near to 10. This 10 is a very good support area, okay. So when you have such candle, even if it is closing, it's not a decisive close. It's not a very direct close. It was some rupee paisa below 10 EMA, but it got very good buying from the bottom. These wicks are telling you that some good buying is coming. So in such cases, you then wait for below this. Okay, so only for decisive close. Exit is only on closing and decisive close. Intraday it can go down, and if it closes up, there is no issues. But if it gives a direct clean close below 10, then it's an exit. So here this is you will wait, you will give it another chance, because it has shown you some strength even after closing below 10. So then it worked very fine. After that, it moved up. It worked. Okay, here somewhere at here 80-90%. I know we are reaching an upper end. Okay, I told you average upside 80%. Don't take it 100, 120. We have seen those examples, but take it as 80 only. So after 80, I know I am reaching somewhere at the upward potential for my swing trade in this. After 80, 85%. Okay, so even if it is not a decisive close up here, I will then exit. In this case, in this it got a very good support, so I will wait here, and in next I will not wait more. I will not give it a chance. Here it makes no sense to give more chance, because you have already reached that upward potential for any swing trade. A swing trade is like from 8 to 15 days to 2-3 months. After that, a stock usually break 10, 20, goes left, right, here and there, consolidates. So after 80, I know that now I don't have to give any chances. But till the time I have reached it, here I am at 15, 10%, 15%, 20% gains only. So I know that let's give it more chance because I've seen this. If it would have been a decisive close, then it would have been an exit in this case. Then I may again re-enter. I may again re-enter on further follow through. Okay. So such decisive close is easy, and after such 80-90%, even if it is not decisive, I will exit. 90-100, I will even not wait for 10 EM, I will simply close it. But for it, let's example it reverted from here, gave a 10 EMA below close. I will exit it because it's already a good move. Already 79-80% is come. Below 10, I will exit if it's a decisive close. Let's say here, you bought this again up here. This one, this is below 10 now. So it's an exit. Your stop loss would have been in this case somewhere below, based on our automatic stop loss. Let's say this is your stop loss. You bought this here. The stop loss was okay. Here I'll keep max 5%. So I'll shift it here. Now in coming days, this went like fine. In 3-4 days, it worked very fine. I reached 12%. But next 2 days, some sudden fall, maybe market fall something. So I'll exit up here itself when it closes at 4%. Below 10, I'll not wait up here. Here it closed. So in this case here, this would have been an exit. Let's see some more examples quickly. It's already a bit late now. Let's see this one. IREDA. It moved here 40, 50, 60%. So part something would have been booked. Balance up here 24%. Okay. Current winners, let's say Q Power. In this recent rally, last 10 months, the one rally which came. So this has been big winner. Somewhere here entry would have triggered. It simply went up and up. Here this is your decisive close at 69%. Clean close, good below 10. You can easily see that now it's time to exit. After that it just started making another base. Then another trade up here. This is another trade point. It went this one 20-22%, and this is your decisive close. This one. This candle, maybe this candle. This is then exit. Here you will reach upward potential. So could have been exited here itself. more quantity you can exit, and more and less you can then hold for final exit. Okay, so in this way, 2-3 parts you can always sell. Always sell in 2 to 3 parts. Don't sell in one go. Until unless it closes directly below 10 EMA, always have 2-3 parts, like moving up, selling some into strength, then holding, reaching the upward potential, can sell more, and then can sell on finer EMA. Okay. So sometimes it can be like this, sometimes it can be like Subros, sometimes it can directly hit stop loss. So every scenario you should know how to handle. So here you can then exit up here. In this case, once you reach 10% kind of move, then you don't want your follow through level to get penetrated. So this is what I do. Once stock has reached 10%, so this is my follow through level where I will plan entry. Once it has reached 10%, 10-11%, I typically don't want it to go below this. Even intraday, I don't want to go below this. So that is now my worst case thing. Okay. So here it went like this, here this. So I will exit in this candle itself. If this one would have closed up here below 10, it was some percentage up, let's say it was a full red candle up here, then I will exit there itself because it's breaking 10. We don't have to hold below 10. If there is a decisive close after your buying, at any moment, if there is a decisive close, whether from 3%, 4%, 5%, 6%, 2 days later, 3 days later, 5 days later, 8 days later, 10 days later, it doesn't matter. Below 10 EMA, decisive close is an exit. Okay. But worst to worst, after 10, I don't want to, once I reach 10%, of course, this 10 EMA will help me get exit at some tiny gains if it reverses from there. If not, then I don't want to get this level penetrated. I will then exit it. So you can say that once you have reached 10-11%, the trade is almost risk-free. Risk-free or kind of 1% stop loss. Okay. Once you have reached 10% kind of, let's say it happened with me with Motilal also. Motilal Oswal. In this I booked part early because of market. This went 9-10%. I booked half up here. And then this is a decisive close. So then this was a final exit at 1.6. Typically, once you have reached 10% gains, the trade becomes kind of risk-free at 10%. Because either your 10 EMA will hit and then you will exit, or worst case, if something suddenly falls, intraday itself goes down, then this level is your final defense line. Say Apollo Micro. This is like keep going up here, 64, here 80 upper limit. This is a decisive close. Here, look, is this a decisive close? Is this a decisive close candle? Vikas says no. What about others? Not only VIX, it's very near to 10 also. That is one more thing to look. Just few paisa down. So it's telling you that it's okay. It went below 10. Some buying came and somewhere near to very close to 10. It's closing. So it's not decisive. It's not very clean. It's not clean enough to exit full up here. Part somewhere you would have exited here itself in this move. Maybe at 10, 15, 20, 25, 30 based on market plus on psychology. Okay. Balance, you keep holding, you reach upper limit, you can sell more at 80%, 90% if it moves up there. Final is this. Final exit. Let's say GRSE, this move. Somewhere, let's see this one. Here. See how it can move above 10 EMA. It can do wonders. It can do wonders. 85% move. Can sell some part based on risk reward and keep balance holding. This is decisive close now. After 89%, even if it is not decisive, then also it's fine. Upper side is done then. You don't need to give it more chance. Final exit. See what happens after that. A complete full reversal. You should not try to hold after that. 10 EMA is your short-term up move, short-term trend. Once that is over, you don't need to hold. In re-enter always again after maybe 10 days, 15 days, 20, 1 month, whatever it is. Like here, look up this one. 40-50% move. Some part could have sold, and then suddenly some market shakeout came. Then part would have to exit up here. Okay, 26%. Such things can happen, and that's why it's important to sell into strength. If you would have held it full, it would hurt a lot more because you were at somewhere 40-50% and now 27%. So it balance of both. Again, you got a trade in this. You are too much worried here. You got a trade up here again. Again, you can re-enter. But holding below this, you should not do it. It's not required. You don't know whether from here it can go like this or can again correct. You look up this decisive close below 10. Did it closed anywhere below 10? No, very good, took very good support, just kept going up. This is where decisive close. That's the final exit. Before that, up to you how to handle based on risk reward, based on own emotions. I cannot tell you one single way, and why I have explained you all the reasons why there cannot be one single way for all. But this 10 EMA close is the final which should be same for all. That's the